Good morning and a very warm welcome on behalf of GDV, the German Insurance Association, to this Spotlight on Sustainable Insurance. My name is Jackie Davis. I will have the privilege of moderating an entirely interactive discussion this morning after a brief opening speech by our host to provide some context for the discussion. Before I hand over, I'd like to welcome those of you watching via the GDV website, via Twitter or via LinkedIn. If you're watching on LinkedIn only, sorry, for technical reasons, only those of you watching via LinkedIn can ask questions or make comments, but we really do encourage you to do so. I have only one request. Please be as brief as possible so I can see at a glance what your question is or indeed your comment. If you would like to tweet out about what you are hearing at this event, and we do encourage you to do so, please use the hashtag GDVLive. So it's now my pleasure to give the floor. I'll introduce the rest of our panel later on, but first I'd like to give the floor to Oliver Hauner, Head of Property Insurance, Engineering, Loss Prevention and Statistics at GDV, to welcome you more formally and kick us off. Oliver, thank you so much for having us today, and over to you.
Thank you very much for opening the online session, Jackie, and greetings to our audience and a very warm welcome to our panelists, Elena, Butch, and Charles. Well, sustainability is a wide-ranging topic, and there is a serious risk for everyone to get lost. So to ensure that no one gets lost today, please allow me a short reminder. Today we are talking about underwriting, not own operations, not investments. With underwriting, the insurer assesses a risk, settles terms and conditions, and bears the risk at the end. Please keep that in mind when writing questions via LinkedIn. Thank you for that. So to prevent myself from getting lost as well, I would like to focus my opening remarks on three topics that are of particular importance to underwriting in the German insurance market. First, the sustainability statement of the German insurance industry. Secondly, the European Union's taxonomy. And third, the debate about the protection gaps. So let's start. 2 years ago, our association adopted a comprehensive sustainability statement. In this statement, German insurers committed to the United Nations Sustainable Development Goals, all those SDGs, and the goals of the Paris Agreement on climate protection. At the same time, we support the goal of a climate-neutral Europe by 2050 and the Green Deal. Especially in underwriting, we are committed to manage sustainability risks responsibly and strengthen sustainable risk transfer. Additionally, we aim to continuously expand the integration of ESG criteria into underwriting guidelines by 2025. In this respect, German insurers are, let's say, committed to the long-term goal of no longer including commercial and industrial risks into their portfolios that negate the transformation process towards a sustainable and climate-neutral economy. This statement forms the basis for our sustainable actions, and this is why our association joined the Principles for Sustainable Insurance. Butch Bakani is with us today on this topic. However, I think the big landmark in sustainability right now is the European Union taxonomy regulation. The taxonomy classifies different economic activities according to their sustainable impact in relation to 6 environment goals. This defines criteria for many sectors as to what is considered sustainable from the perspective of the European Union. When insurers underwrite risks, so no investment, no own operations, when we underwrite risks, goal number 2 applies. This is adaptation to climate change. There are several criteria in the delegated acts that insurers must positively meet in order to be taxonomy compliant. For example, leadership in modeling, in pricing of climate risks, or providing a high level of service in post-disaster situations. And there's one very special thing, the so-called do no significant harm criteria. Individual underwriting actions of an insurer must not have a significant negative impact. The regulatory framework for insurers here focuses on the business cycle of fossil fuels. I will come back to that in a minute. All those requirements are checked on the basis of technical criteria and relevant standards. If the result of an assessment is positive, the economic activity of insurance underwriting becomes a green, sustainable economic activity in accordance with the taxonomy. In practice, however, this picture is usually less clear. The regulatory framework reminds many stakeholders more of a foggy morning with poor visibility than a sunny day with clear skies. For example, is a petrol station part of the fossil fuel cycle? Because insurance for the storage of fossil fuels is mentioned as harmful in the Do No Significant Harm section of the Delegated Act. Does the European Union really want us to stop giving cover to petrol stations? Big question mark. I will leave it here as a short insight on this particular topic. Don't get me wrong. Those unresolved questions on the interpretation of taxonomy are nobody's fault. In the complicated task of defining sustainability criteria for hundreds of economic sectors, there are always rough edges and things that are not entirely clear. Against this backdrop, German insurers might sometimes grumble about the lack of clarity, as companies always do. Our industry does not see sustainability as an obstacle or even a threat to existing business models. On the contrary, sustainable actions like prevention, avoiding harmful events, and rebuilding better after a loss have always been part of the core business of the insurance industry. This brings me very briefly to my last point, the so-called protection gap, especially in natural hazards. Personally, I think the topic is very important, but the term protection gap is an unfortunate choice. I've seen it so often that the term is misunderstood in the public debate because anyone can project anything into this term. What opened the protection gap? Who has to close it? Is that even possible? Questions after questions. I think I took my time. I will leave it at this point as my opening remarks. Again, thank you for listening in, and now back to you, Jackie.
Thank you very much indeed, Oliver. And that question of what do we mean when we talk about the protection gap, and I would like to get the panel's reaction later to whether they think it's the right term or not in our discussion. But as you said, this spotlight on sustainable insurance follows the spotlight on sustainable investments of a few weeks ago. And today we are very much focusing on the underwriting side and examining the industry's potential to promote the green transition and prevent natural disasters. So please do focus your questions on the underwriting side, or indeed your comments. So let me introduce our panel today. I'm delighted to welcome Elena Wiśnia-Malewkowska, who is Head of Unit for Adaptation and Resilience to Climate Change in the Directorate General for Climate Action, better known to people in Brussels as DG Klima in the European Commission. We have with us, as was mentioned by Oliver, Butch Bakani, who is Programme Leader of the United Nations Environment Programme's Principles for Sustainable Insurance Initiative, and Charles Lowe, Head of EU Affairs at FERMA, the Federation of European Risk Management Associations. I have asked our panel not to make any opening remarks. We are going to dive straight into the discussion. I have some questions for them, and I will feed your questions and comments in as we go along. So please do keep them coming. And let us just start. I mean, Oliver was talking there, Elena, about this being in the DNA of the insurance industry. It's always been the core business, the sort of issues that you're facing now. How great do you believe the potential is of the insurance sector to help drive the green transition? And if you think it's important, broadly and in headline terms, then we'll delve into the detail, are we doing enough to realise that potential?
Thank you very much, Jackie. Similarly to Oliver, I will try to be very simple in my messages. So first of all, nobody can claim there is zero risks due to climate change. Not after the International Panel on Climate Change issued its authoritative report, which unfortunately didn't make it to the headlines of many mainstream media. So to be protected against climate change, you need a very strong action and conscious choice for your activities. At the aggregate level, the climate protection gap, and let me be very clear, is impossible to be avoided. So to narrow it or to prevent from widening this gap requires collaboration between insurers, regional authorities, consumers, risk managers, and so on and so forth. Now, climate-related insurance is very important because it helps in the post-disaster recovery. It reduces vulnerabilities, it signals risks, and it helps to build knowledge on risk management. But if you look at the numbers, and of course, the increased level of uninsured losses, there are scissors opening up. So to your question, is there still potential to do more? Yes, absolutely.
Let's discuss what we need to do in more detail in a moment. But just to continue building our picture of the role of this sector and why what we're talking about matters so much. Butch Fakani, very warm welcome to you. Again, same question to you in terms of the potential and whether you think we, i.e. policymakers and the industry itself and industry more broadly, are doing enough to realise that potential.
Yes, so first, the opportunity for the insurance industry, the answer is great. Are we doing enough for the industry and policymakers? The answer is no. So let me expand on that a little bit. When we founded the UN Principles for Stable Insurance in 2012, we were very clear on how to harness the full potential of the insurance industry for sustainable development. And that's very clear in terms of the triple role, the role of a risk manager, which is about, first, the role of a risk manager. How do you understand and quantify and prevent and reduce risk? No one wants losses to begin with. So all the risk analytics, the catastrophe risk modeling, scenario analysis, loss prevention, and risk reduction measures in the insurance risk management continuum should be unpacked for the benefit not only for the industry, but for the public, for businesses, and communities around the world. That's the first port of call. The second role is the role of an insurer. And obviously, the insurance has been more closely associated with adaptation and resilience because insurance is a natural form of adaptation. So it is a financial shock absorber when losses do happen. And I'll come back to insurance because we have also repositioned the role of insurance, including but not limited to adaptation and resilience. And the third role is the role of an institutional investor. I know this event is not focused on investment, but globally, the industry has 36 trillion in assets under management. The way that capital is deployed would have a telling impact on sustainable development. I mentioned that because insurance companies have two sides to the balance sheet, a liability side on underwriting and an asset side. You cannot be sustainable on one side of the balance sheet only. You need to have cognitive consonance in making sure that the left hand knows what the right hand is doing as far as sustainability. So while this event is focused on underwriting, we cannot disassociate the role of insurers as institutional investors in making sure that they manage that house as well.
So
now
going back to the coin.
Yes, yeah. Now going back to insurance, I think, yes, so I think by default, insurance is more closely affiliated to resilience and adaptation, and that's true. However, what we have done in the PSI is also to expand on the role of insurance, just like any other form of finance, like investment or lending. We believe that insurance can also internalize negative externalities like greenhouse gas emissions, like nature loss, and like human rights violations. So, and that's the reason why we've created initiatives like the Net Zero Insurance Alliance, where the focus is not on adaptation, it's about how insurers can support the transition to a net zero emissions economy. And by extension, you can also say that insurance can be a lever to prevent further degradation of ecosystems and biodiversity loss and further violations of human rights. So I think I'll stop there. But that concept of insurance being a lever on climate to decarbonize the vehicle economy is much newer than insurance as a lever for adaptation and resilience. But on both fronts, we are not doing enough, both in the industry level and both at the policy level.
Thank you very much. And I want to come back to what the implications of that are and what we need to do in a little while. But Charles, complete the picture for us in terms of your assessment of the importance of the issue we're discussing today and whether you share so far the sense that, yes, some progress, but a long way to go, a lot more could be done.
Yeah, thank you, Jackie, and thanks to the GDV for inviting FERMA, the Federation of Risk Management Associations, and I'm happy to hear both Butch and Elena refer to risk management. We're, of course, very happy to hear that. I wanted to say also thanks to Oliver for giving a very comprehensive introduction. I think to add to Butch and Elena's points of view, there's not much really that I can say other than that I agree with them really pretty much throughout what they've pitched there. Maybe to give a little bit of a different perspective, I mean, as well as representing risk managers, we also represent buyers of insurance, so the clients of German insurers, but also insurers throughout the world. And I think maybe my comment there is one of moderation. Yes, the insurance industry has a great potential to facilitate the transition, but let's not overstate it, right? The insurance industry can only do so much in and of itself. I think from our side, as representatives of clients of insurers, I think what we realize is that there is a very real pressure on insurers, like Oliver mentioned in his opening remarks, that with the taxonomy, what I can add to the fold here is that what clients are feeling is this very real perception that there's problems offering coverage, and when we pose the question to insurers, where's that problem coming from? Invariably, it will come to different prudential requirements, things related to the taxonomy. So I think there is a very real pressure there that's borne by us, the innovators, and in order to innovate and make the most of the transition, we need to take risks. Insurers are there to help us cushion the blow, to Butch's point. But yeah, their role can only go so far. I think I'll leave my opening remarks to that.
Thank you. And I want to come back on the role of policy in all of this, the sort of framework that you need and your expectations of each other in this area. But before we delve into that, I wanted to come straight back on the point that Oliver made when he said the protection gap discussion is a very important one, but he described the term as an unfortunate choice and said it was often misunderstood. Oliver, before I get the rest of the panel to react to that, what term would you prefer? How would you describe what we're talking about?
I'm sorry, I don't have a term that really fits into it. Because today in media and other circles we are diving into, we need short terms that fit into headlines and give us some advice. Protection gap really is something that describes that there is something, a gap needs to be closed, or remind the gap. If you ever traveled by the London Tube, you all know mind the gap, and you are aware of that. So how do we cope with it? I think this is what we should more focus on. It's just to say there is a protection gap. It's not enough for me. It's what we do with the protection gap. Do we need to close it? Do we need to monitor it, monitoring it? Do we need to analyze it? Is there more than one protection gap? This is unresolved when we're just talking about this term, and therefore I wish we had a little bit more context when using the protection gap. This is what I'm.
The term can stay, but we need to be aware that what we're talking about is multifaceted, complex, and can't be reduced in that way. But Eleanor, you said in answer to my first question, it's impossible to avoid it. You said we can maybe prevent it from getting wider or we can narrow it, but we can't avoid it. For you, do you share this concern that maybe it's an oversimplistic term and that everybody interprets it differently? Is that an issue for you? And what do you see as the key challenges to address in order to narrow or indeed prevent it from widening?
Thank you, Jackie. I think we need to understand that we are becoming a little bit of a slogan society, right? But since we have been behind the term, I must say I'm very happy about it. And I'm very happy about it because it stirs up exactly the conversations, Oliver, you mentioned. And it triggers a sort of cognitive reaction about an interest, visibly. So we use the term as a share of uninsured losses within the overall losses. And it comes back to a report by the Environment Agency that shows that only 30% of all losses have been over decades actually insured, which means 2/3 of it have fell on the shoulders of you, me, governments, households, industries, companies, and so on. So that's really huge. But let's make it even more complex. These are financial losses. Financial losses are measurable. But take, for instance, what disruption brings to your well-being, to your mental health, to the business activities, to productivity, etc. So we have a whole, bubble of shadow losses that cannot be quantified as easily. So what we have started to do is we said we need a conversation. And this conversation started with a climate resilient dialogue, essentially to build this understanding around the climate protection gap. And from my experience, it's always good to bring even something imperfect to the table that allows the others to build on, to enrich conversation, etc. And as soon as we have a common understanding what is behind the climate protection gap and how to improve the understanding, we can design policies. We can design also the following activities.
Okay. I want to come back on the role of that dialogue, the role, and you emphasised in answer to my first question, the point of collaboration and how important that was, and I'll come also back to Butch on that. But Charles, just in terms of this definitional issue and this terminology issue, how important do you think that is, and how do you define that gap? We've heard Eleanor's definition, and the challenges in order to meet it.
Yeah, thanks for the question, because I think protection gap is on the one hand important for us as the clients because it puts some spotlight on the fact that there is a discrepancy between overall losses and those losses that are insured. But much to Oliver's point, I think for us it's imperfect, and with risk of maybe being a broken record, I don't think I can come up with a real solid alternative one neither. I think for us as clients, something that's quite important to capture in that second level discussion, to Eleanor's point, is for us, protection gap's a little bit more about to what extent is our demand for insurance able to be met by the private insurance market. And, I think Oliver was great in his opening remarks speaking about that petrol station. We want those to be insured from a client point of view, but then if the insurer's turning around to us and going, well, don't know about this. And then even, let's say, in the more circular economy, I know from a lot of our members, there's great difficulty getting some insurance in the area of like recycling plants and so forth. Also, we hear from a lot of our members that construction projects using timber, for example, it's difficult to get insurance coverage on that. And that is obviously an issue for us that we want to be deeper explored. So I would say that there's elements of both Eleanor's points and Oliver's points in my response, but I think it's good as a starting point, and it has certainly helped put some more spotlight on what I would say, maybe that's too much of a British expression, but on the insurer's bread and butter, because a little bit, somehow this series is quite indicative of a situation for us. Before the underwriting part, insurers were talking about the sustainable investments. And to me, that's the wrong way around. But okay, that's a comment.
Okay.
For
yeah, but as you say, bread and butter, i.e. core business, part of the core of what you do. Butch, complete the picture for us in terms of this debate about the terminology and the key challenges, whatever you call it, if we are to narrow the gap. That 30% figure that Eleanor gave, which of course, in the context of climate change, the risk is it grows, not shrinks.
Yeah, so my view on the term, the protection gap, I think the classic one is the difference between economic and insured losses. I think if you expand that a little bit, you can say, what is the lack of cover for innovative technologies that are needed to make the transition to a sustainable economy happen? Because there's a lot of things that we need to ensure if we want to transition to a sustainable economy, be it renewables, nature-based solutions, carbon capture and storage, etc. And if there's a gap there, you may be stifling the transition to a more sustainable economy. Now, on the term itself, I think a protection gap implies that it's a consequence. It's a consequence of something. And I would argue that the gap is simply a consequence of poor risk management. If you unpack the whole risk management continuum, we haven't identified risk properly, we haven't prevented and reduced risk properly, hence, and if you are not doing anything to mitigate underlying risk, you will, as a consequence, you could have the protection gap, be it high unaffordable insurance or lack of coverage, if you don't mitigate risk. So for me, there are many reasons for the protection gap. Poor disaster risk management is one of them. Unsustainable land use planning, outdated building codes and building standards, and if they're even updated, if they are enforced, is another thing. Then you have early warning systems and disaster preparedness. So that's one. Second, you can go into other things like insurance penetration and density. What's the reason for that? It's an issue of availability, affordability, and accessibility. And it's an issue of low insurance literacy, for example, across markets, particularly in developing markets and emerging economies. It's an issue of some insurance products being poorly designed and not catered to, for example, low-income and vulnerable communities. And there's the issue, to Elena's point, of lack of enabling policy and regulatory frameworks, where insurance is really a core tool to support sustainable development. So I think all of these points lead to a protection gap, however we wish to define it.
Thank you very much. Oliver.
Just one point at the end, because I think it's very important. As we said, some losses are insured, some are not, but some are definitely uninsurable. There are limits to private sector insurance. So looking at these limits means that the protection gap is not between the 100% economic losses and the insured losses somewhere, but between the insurable losses, the 100% insurable, and the actual market penetration of the relevant policies we are talking about here. So I think this is where the protection gap really is. And you asked, did we do enough? No. Like the other said, there is still room for improvement, that we can close the protection gap. But the protection gap is not closing the 100% economic losses we can all see in the European Union or other parts of the world after large-scale losses, natural catastrophes, and so on.
And as I understand it, from your perspective, it is closable or narrowable if we stay within the Paris Agreement. But if we don't, then that uninsurable element becomes bigger and bigger. But Oliver, can I just also, on another sort of terminology and also challenges issue, impact underwriting and sustainability underwriting? What are we talking? What do the two different terms mean? And what for you, you talked about some of the things you've been doing in terms of your sustainability statement and targets. What are the challenges to deliver on sustainable or impact underwriting?
Impact underwriting and sustainable underwriting are also, let's say, artificial terms. In my opinion, there's only underwriting. So, and underwriting includes a sensible risk assessment. We were talking about the risk assessment today, Charles, you also mentioned it. This involves taking a very close look at the policyholder's risk, which can be risk from all areas. Well-known risks such as fire, windstorm, or you name it, third-party liability. Or more modern risks such as the protection of natural habitats, biodiversity, fair working conditions, and climate change. And then every underwriter asks himself the question, how is he going to deal with these risks? He or she can simply calculate the risk and charge a premium that is in line with the risk, or he or she can mitigate some of the risks through prevention and adaptation measures. That's important. For example, no one, Charles, you mentioned timber, no one would insure a sawmill without a sprinkler system, for example. And the same consideration applies to the sustainability risks, the more modern risks. But there's one important difference in the underwriting process. The underwriting of those well-known risks like fire in accordance with Solvency II, our solvency regulation must clearly be separated from the ESG-related decision-making progress. I'll give you an example. Think of a warehouse full of T-shirts looking for a cover against fire. The risk of fire is dependent on whether the T-shirt was made by child labor? Clearly not. Is the risk-based fire premium dependent on whether the T-shirt was made by child labor? Clearly not. But if I, as an underwriter, suspect that my future policyholder is involved in child labor, I must refuse to accept the risk from the outset. This is a separate decision-making process from the risk assessment of fire. Therefore, every insurer has to have a separate set of underwriting guidelines that define how to deal with these ESG criteria. And this is why we have these different terms at the end. The impact comes naturally by, let's say, improve the prevention measures or to improve something that is related to ESG.
Okay, so we've talked about the definitional issues. We know what we are talking about here. And I do encourage you, if you are watching via LinkedIn, please do get your questions and comments coming in. I want to turn to the crucial issue now of what do we do about this, and crucially how you see the role of the different actors. And I perhaps would like to mention here a poll that was carried out by GDV on LinkedIn over the last week, asking people, in which stakeholder group do you see the greatest impediments, resistance to closing the climate protection gap? Very interesting result. 56%, so over half, and Charles, I get you to comment on this, said the business and the industry sector. Only 20% said politics and public authorities. 19%, so very close, said it was private households. And 6% said cities and communities. And Butch, you talked about the role of municipalities and planning decisions and so on, but clearly feeling that the industrial sector is not doing enough to close that gap. Just in terms, before I come to our industry speakers, Butch, can I ask you, you've talked about the United Nations principles for sustainable insurance, and Eleanor talked about the climate resilience dialogue. We've had mention of taxonomy and so on. How do you see the role of policy and the role of so in terms of voluntary initiatives like the one that you led the work on, and regulation? You talked about the lack of an enabling policy framework. What is the respective role of the two sides of that coin? And when you talk about that lack, what's missing?
Yeah, the answer to your question, Jackie, is in the principles. If you study the principles for sustainable insurance, the way it's configured is based on the spheres of influence of an insurance company. Principle 1 is about embedding ESG issues and sustainability issues into everything that an insurance company does, from company strategy to risk management to underwriting to product development, sales and marketing, claims, all the way to investment management. Principle 2 means that if you're an insurer doing these issues, you need to make sure that everyone else in the value chain works on these issues. That means you have to work with intermediaries like brokers and agents, with your clients, be it corporate or retail clients, with your suppliers, etc. And principle 3 says that even if the entire global insurance industry does this, it won't be enough. And that's the reason why it's a recognition that principle 3 says that we will work together with governments, regulators, and other key stakeholders like civil society in driving widespread action on sustainability issues. And principle 4 is accountability and transparency. You need to be able to demonstrate and be accountable for everything that you do. The last point that I wanted to say, so having said that, this is not simply an insurance company discussion. It's the whole chain from clients all the way to reinsurers. It's not only an industry discussion. That means governments need to do their part, regulators need to do their part. And in that engagement, the insurance industry can certainly engage with policymakers and regulators and other actors to drive that systemic change. I think that's really important. I think the one thing that I wanted to touch on, which you also mentioned when you spoke, Oliver, earlier, I think when we talk about sustainability and impact, I think we need to think about outside in and inside out concept. One is, how do sustainability issues affect my business as an insurer? And the other concept is, how does my insurance business impact on environment and society? And one can say that this concept of sustainability has evolved from simply what is financially material to you to what is the impact of your business on the environment and society.
But just before I come to Eleanor on this question of the role of regulatory and so on, you talked about principle 3, that working with governments and so on. What for you is missing? Where does the focus need to be?
A lot. So there's a lot of things. Number one, on regulators, and if you talk about insurance regulators, we can tell you what we've done to help plug the role. We created a PSI for regulators in 2016 called the Sustainable Insurance Forum for insurance supervised regulators. Since we're hosted by GDV today, BaFin, the German financial regulator, is part of that. So is EIOPA in Europe is part of that. So that's one thing that was missing. Number two, I think, is if you look at the wider space of policymaking, we think, and that could go all the way to the UN. We're talking about climate change, for example, that goes to the climate conference every year. So what can we do? We think there has to be a greater role by governments to make sure that their national climate plans, be both on net zero and adaptation, are very strong, so that industry, through PSI and other initiatives, can do their part, be it on adaptation and resilience, and also on net zero, for example.
Thank you very much. Eleanor, for you, the role, and we talked, and Oliver talked about the EU taxonomy. He said it was the biggest landmark in the sustainability debate right now. The role of taxonomy, of regulatory measures more generally, Charles mentioned earlier, prudential requirements and so on, and the role of voluntary initiatives. We'll come back to the role of industry and what you want from them in a minute. But in terms of what we're doing, how you see the respective roles of the regulation, the voluntary, and if you think anything is missing. And then I'd like to get Charles and Oliver to react.
Okay, thank you very much. Well, first of all, we need regulations and voluntary action. Regulation is something even industry calls for, saying we need it for predictability and benchmark reasons. But I know regulations are often seen as a whip in our European context. Voluntary action steers interest, aligns them, but at the same time, you need to have a structured process, clear expectations on deliverables, otherwise you end up in a sort of talking shop. So there are positives, negatives, you really need to have a clear purpose, and you fail with industry only once, They are budgeting their time, and if they go into the sort of conversations, they want to see something at the end of it. But hopefully they will also go for self-regulation. Now, what I am missing sometimes is a massive awareness campaign by everyone towards people. There is a huge gap in terms of financial literacy. And I tell you this also as a person who is educated and who has been in the banks, who has been, there are things that need to be explained better. No sort of footnote remarks in contracts. And the questionnaires need to really help policyholders or future clients to understand, what I can do, what I can't do. This is not for the banker or insurer just to, fill out in private. This is really to have a meaningful conversation. And the second is really the alignment. Butch, you mentioned it, we need a huge coordination policy effort in aligning this so that there is a sort of value chain and the interest flow naturally instead of all these impediments that the poll actually was putting spotlight on.
Thank you very much. And we'll come back. I'll ask you later what you want from industry, but I'm focusing first on the policy side. Charles, your reaction to what you've heard in terms of how Butch and Eleanor see that role of regulation, the role of the voluntary initiatives, and what do you want from them? What more do you want from them?
Yeah. A lot to unpack there, Jackie, in a fairly big and expansive question. I'll try and keep my comment a bit limited and targeted. I think, that there is very obvious reasons why this topic is fiendishly complex, and there's lots of actors that need to be involved in it. I saw from the presentation of the results of the poll that the GDV did, there's a lot of onus that's at least being placed on industry, and sure, that's inevitable. I think Butch raised maybe a provocative point, but a good one for me to chew on, that a lot of this protection gap arises from poor risk management. And I think my reaction to a lot of what's been said here is the industry has a long way to go in and around these topics, but I think something that's going to help and facilitate companies to know better their exposure, and in order to, once they've known better their exposure, they can then better manage their risks. In principle, a big important factor there is the dissemination of data, right? And that's where there is obviously, and Butch, Oliver and Eleanor know this all well through the EU Climate Resilience Dialogue, there's obviously a big push between all of the actors at various stages in and around the protection gap, or whatever we wish to call it here, where data is really key to this topic. So I don't think I can expand much more upon the other points, but I'll happily jump in the discussion when it opens up.
Yeah, and I want to come back on this point when you said industry undoubtedly has a long way to go. What are the key impediments? What is the challenge for you? But Oliver, just focusing still on the policy framework at this point, and that balance, the role of regulation, the role of the voluntary initiatives we've heard about. Now I see a question coming in about one of those initiatives. I'll come back to it in a little while, but do keep your questions and comments coming. How do you see it? And for you, in terms of a reliable policy framework, is anything missing, do you think?
No, thank you. I would like to start with the 6% from municipalities, because this was quite astonishing. Because I think sustainability begins at your doorstep. And so municipalities have a lot to do. So I'm a little bit surprised that this figure was very low and the figure for the industry was so high. So municipalities are at least in the same amount of pressure to do something than the industry or real economy, financial economy, and so on. So back to your questions. As I already said in my opening statement, I think regulation cannot be perfect for such a complex task that we have. This means, and thank you very much, Elena, for mentioning it, or Charles, I don't know, someone said alignment. We need something to have like an alignment, a review process, fitness check, or what all these neat terms are called for our headlines. Because at the moment, as the colleague said, a lot of things are well intentioned, but they don't really fit together. But to resolve this is only a question of time and will, and I'm confident that we can succeed in the future, like in the climate resilience dialogue. The volunteer initiative, I think they are very valuable because they have an influence that goes far beyond the members of those initiatives. Butch, you mentioned the goal number 2 of the principles for sustainable insurance, to talk with the customers, to talk with others, to make them aware of sustainability, your goals, and to get them in how to reach those goals together. And I think this spreads the word. And adding to that, Elena, you said awareness campaigns. Yes, this is something we definitely need. When I take a look at my children in school, I think they didn't have anything to do with sustainability apart from how to don't litter the schoolyard. Yeah, so I think there's a lot to do. But again, we can see that we are dealing with different speeds here, especially in the voluntary initiative. Some insurers are marching ahead in the initiative, some follow behind, and those that follow behind sometimes look a bit rushed, but I think this is only a matter of time. But this brings me to an important point. Both regulatory and voluntary initiatives should take, I think, proportionality into account. This is the only way to ensure that we bring the broad mass of insurers along and that no one is left behind. Especially in Germany, we have very small insurance companies, and we have all those big ones you know quite well. I think this aspect has been somewhat out of sight recently.
Okay, let us turn this now on its head. And let me ask, and this time I'll start with you, Eleanor, in terms of what you want from industry, from the insurance sector specifically, but also from industry more broadly. And were you surprised at that figure of 56% when people talked about what's the greatest resistance impediment? Oliver expressing some surprise about how low cities were and how very high business was. What was your reaction to those poll findings? And what do you want from them? If we are to realise the potential, what more do they need to do?
Yeah. Thank you very much. I would maybe agree with Oliver that there may be a certain bias in the replies, in the sense that you got a sort of expert views for the industry and rather less of these expert views for cities. We had several outreach discussions with cities, and I realized some even do not understand insurance as a private business, but as a sort of public service. And that, tells you a lot about the type of thinking. Well, the role of insurers is definitely to deal with financial uncertainty and to make accidental loss manageable. That's really important. And we know that with climate change causing now higher frequency and events becoming more costly, this indeed poses the question of insurability. Insurability, you can look at it from both ways. The negative is, yes, there will be public funds that will need to be covered, or people will just make losses. But also from the positive one, as a signal. You shouldn't build here. The spatial regulations should be aligned in terms of, the sea level rise threat, etc. So I think as this conversation shows, the insurance sector is well aware of the risk. The other industrial players, I have my doubts. There are probably risk management departments, but they deal with more immediate risks to business than the climate change that they take, this is 10, 20, 80 years ahead. So what then the insurance sector should do is to be part of this awareness raising campaign when they deal in the business to business dialogue and business to business relations. So that's very important, and to highlight the vulnerabilities of the industrial players in their supply chains, in their business activities, in the energy supply, etc. I think we need to keep the ability to get a product, insurance product. So I would also like the insurers to still developing the insurance products that take the reality of climate change into account, but at the same time also push everyone, local authorities, etc., to react upfront, because we need to avoid to prepare for the inevitable impacts with the lowest losses possible. And this really requires working upfront and visualizing a damage that is not yet there, but will be there if you do simply nothing. So I will end up on the same note as before, is the common policy effort, is the alignment of needs, interests, and agendas.
Thank you. And I want to come back on how to get that alignment, and therefore what are the keys to effective collaboration, drawing on the experience of the UN principles, drawing on the climate resilience dialogue. I know it's new, but how is it doing? But Charles, I have to give you a chance to react before I come to Butch on this. She said the insurance sector, said Eleanor, she thinks aware of the risk, but she said, I have my doubts about industry more widely. Were you surprised by the 56% figure in our poll? And your reaction to Eleanor, can you reassure her, or do you also believe that within the corporate sector there is a long way to go in terms of really realising how important this issue is and acting on it?
Thanks, Jackie, for the question. My answer most directly is it's a bit of yes and no. As always, there's a grey area there. I think I can't profess to speak to corporates broadly. What I can speak about is to Eleanor's point about their risk management departments. Yeah. And I think Eleanor's point there about the other risks that they confront is really valid. I mean, corporates right now, and that you can see from FIRMA's investigations with our members about their overview of the key risks that are impacting on their corporate. If you give them a 1-year time horizon, everybody's talking about cyber. But if you give them a much longer term horizon, they're talking about climate risks, ESG, etc. And I think that is quite interesting, because obviously cyber risk is a big thorny area between the insured and the insurer. That's a subject of a different discussion, but Oliver will know well. Just at the turn of the new year, we had a CEO of one of the big insurers saying that much of the risk is uninsurable. The discussion there mirrors a little bit what we're having in climate risk. And I think for us, maybe that's somehow always a fallback from the industry, but I think it's really a valid point. There needs to be an appreciation of a long-term partnership, and that's not just from the insured with the insurer, but that's also with the policymaker too. I think, to manage and tackle some of these risks that are somewhat, let's say, medium term in terms of their materialization, the corporates are really pressing there for insurance solutions in the short term. But then, as we all know, there's a fixed term duration of a contract. When it comes to renewals, some crazy things can happen. Premiums go up. That's a problem for the insured. And we need to collectively come up with something that's going to be a little bit of a more longer lasting solution. So I appreciate I've not given concrete details to the provocative question, Jackie, but it's complex. And I think I must really underline, let's say, FIRMA's commitment to this EU climate resilience dialogue there, because that's going to be something as a launch pad, I think.
And I want to come back on how that works. There is also a question about the Net Zero Insurance Alliance, which I will come back to when we talk about how to build on collaborative approaches to date. But let's continue for a moment. Butch, in terms of when you were underlining those principles and where we go from here, what more, you talked about the policy environment, what more do you want from industry in this area, and how do you see the challenge? And if you have any other questions or comments and you're watching via LinkedIn, please do keep them coming in. Butch, what do you want from these guys?
Which guys? Which industry? Is it the insurance industry or yeah?
Into the insurance industry specifically, and wider industry, and the sort of people that Charles represents in FERMA. So he's talking about the risk management part of the corporate sector, but more widely their influence on companies as a whole.
Right. Okay. So what I want more? I want more insurers and more corporates and companies in the real economy to assimilate the implications of what science is telling us. Because ultimately, we need to act based on what science is saying. And science is amoral. It's not immoral, it's amoral. It's not concerned with the rightness or wrongness of something. It simply tells us that's a state of things, and you need to, latest climate science says, we're way past emissions, we're gonna break the 1.5 degree threshold, etc., and it will have ramifications on society as a whole and human existence in general, right? So and the reason is that once we're able to assimilate what science is telling us, I think collectively, be it industry or corporates or policymakers, there will be a sense of urgency. This is what the UN Secretary General was saying. It's a code red. Code red means it's an emergency. We are not acting with the urgency and the scale and speed that's needed to beat the climate crisis, both in terms of reducing emissions and both in terms of addressing the impacts. And one can say that's like a big thing to do, but that's really important. When we're talking about 1.5 degrees, I mean, to the uninformed, oh, it's 8 degrees today. It's just 9.5 degrees tomorrow. That's not so bad. But that's not really the case. That's the global average. And 1.5, we are already at 1.5 degrees, approaching 1.2 degrees. And 1.5 degrees is the limit that we're trying to, it's not a safe harbor. It's the least worst option that we could still shoot for based on what science is telling us. So that means things will get worse from where we stand right now. And once we understand what science is telling us, I think society will actually drive that effort. That's the reason why COPs are informed by the IPCC science. And I think that science has to permeate throughout society, all the way to the way our education system, so that everyone acts with the urgency needed.
Thank you very much. And Oliver, just to complete this picture, and then I want to spend the last time we have talking about the collaborative initiatives and approaches, what we learn from them and how we build on that. But you talked about your sustainability statement, and then I think you had a report in 2022 saying we've made good progress, but there's a long way to go. What do you see as the key challenges for yourselves now to build on that progress and to reach your targets?
Jackie, there's always room for improvement. We can always do more. I think, in my personal opinion, the way forward is an intensive dialogue between insurers and the policyholders, from my perspective. And not to forget the lawmakers, but first of all, the insurers and the policyholders. The dialogue needs long-term cooperation, and this needs to be improved because we have to solve problems on both sides. On the insurer side, for example, the underwriters need to learn how to deal with sustainability on a day-to-day basis and focused and in a sensible way. Sometimes they are not aware how sensible this issue is. And in a world that increasingly relies on digital data sharing and less trust-building negotiations and conversations, this is a real challenge if people are maybe just do web meetings and so on. The same is true for the policyholder side. Charles, no one likes to answer countless questions about their own business and about sustainability. So I think an important way to restore some calm and go on the market at this point would be to develop a uniform basic maybe on sustainability questions. And at this point, insurers, brokers, policyholders, they still have a great potential that can be leveraged. But just a final remark. I think in practice, it's not only black and white we are talking about. There are many shades of gray. Imagine an automotive supplier with a core business until now in combustion engines. Now, bit by bit, he's switching his components over for electromobility. But the company financed this investment. From the profits it still makes on the components for the internal combustion engines. If we now withdraw the insurance cover from this company simply because it's still a manufacturer for internal combustion engine components, we will be making, I think, a mockery of the entire transformation process. So, as I said, there is no black and white, and this is something insurers and policyholders and lawmakers have to really put upfront on their monitors every day when they talk about sustainability.
So you're not focusing on hard exclusions, as it were. You do that, we don't insure you, but rewarding with lower premiums and so on, those who do take action.
Yes, I think it's within the EU taxonomy. If I give lower premiums, if I do risk-based pricing, risk-based underwriting, and I give lower premiums to those who act better, to those are more sustainable, I think that is the right way, not punish someone. As I said, if someone is not, let's say in 2025, 6, 7, I have a policyholder that is by any means, is not doing anything in the transformation process, and he's not willing to do it, then I will stop providing insurance for him. That's my personal opinion. But if someone is in a transformation progress, I need to give him the room he needs for improvement, the room to breathe.
Thank you very much. There is a specific question before I ask you all about how we build on the collaborative approaches to date and what you hope to come out of the dialogue, Elena, from Friederike Krieger, who says, I have a question regarding the Net Zero Industry Alliance. Has the initiative a future after Munich Re and Zurich left it? A suggestion in the question that this is about antitrust concerns, but somebody else in the chat saying, no, it's not about that. Butch, does it have a future? How do you see the way forward?
Absolutely. As long as you believe that insurers have a role in decarbonization, in decarbonizing the real economy, absolutely. And this is the theory of change of the Net Zero Insurance Alliance. The theory of change is that insurers not only have this valuable role in providing risk management advice and insurance cover for adaptation and resilience. By providing insurance cover, you're also enabling economic activities. And those economic activities could be sustainable or unsustainable. And there are many things that you can do to support the real economy to transition to net zero emissions. You can have, as many insurers have done, certain policies for certain activities. I think what Oliver was alluding to is at the very core of the alliance, which is how can you engage with the real economy, be it corporate and retail clients, and support them in transitioning, because there's spectrums from one end to the other, but there's a big gray area where you have industries from agriculture, cement, steel, and others who need to make that transition, including hard-to-abate sectors like shipping and aviation. There has to be a role in the transition there, and we believe that insurance has a role in helping the real economy transition all the way to homeowners and households and those who own cars. So there's absolutely unequivocally a future for the Net Zero Insurance Alliance.
Thank you very much indeed. And a very quick one, Oliver, to you. How can we succeed, asks Ludwig Krummer, in installing sustainable insurance products that take into account the expected risks at affordable prices? This goes back to Eleanor's point about innovative insurance products and the need to continue to develop those.
I think the insurance industry is quite innovative in this area. As I said, we already have sustainability in our DNA. And now the question is, what can we add to that? Like Build Back Better, if you take a look at the UK and what Flood Re introduced a few months ago, a Build Back Better initiative where you have a pot of money, I think it's 10,000 British pounds, to really build better than your wording said before. So normally you reinstate the policyholder and now you do something better. I think this is something we could add up on top of what we already have. But let's be very clear. Everything we add up costs money. Those 10,000 British pounds, they need to be financed. I think Flood Re is not some kind of, let's say, charity. So
Charles, you wanted to
someone has to pay for it.
Yeah. I just wanted to compliment what Oliver is saying there. I think it's spot on. But I think maybe let's not be overly focused on coming up with a sustainable insurance product. I think back to Oliver's point a couple of questions ago, it's really just about underwriting. And I think that what the client is trying to push the insurer towards is this long-term view, because I think we can all agree that while there are some, to Butch's point, while there's some very real impacts of climate change that are happening right now, a lot of what we are talking about in terms of sustainable or impact underwriting is a little bit in the near future. And I think we need a more holistic understanding of the risks and exposures that companies are facing to develop medium and longer term solutions between insurer and insured.
Helena.
Yeah, I wanted to come in here also because I want to build on the conversation between the insurer and the policyholder. And this conversation is essential for the policyholder to understand. And normally it is through the commercial contracts where individually you can much better negotiate some terms, etc. I would like to see much more standardized contracts that you take out of shelf, because this is what you offer to the policyholder that does take into account, of climate risks, etc. I would like the insurer also to say, if you do not act, this is what can happen. This area has been flooded. This area is often, subject to hail, etc. And, show the cost of non-action as opposed to adaptation investment, and providing this way incentives to the policyholder.
Charles, you wanted to jump in. It has to be very short.
It will be very short. To Eleanor's point, I totally agree. But we should also not forget the role of the broker there, the intermediary between the client and the insurer. I mean, they also have a real role to play in that.
Okay. Thank you. We are almost out of time. We have just about 6-7 minutes left, and I want to ask you 2 questions, and I'm going to wrap them into one to use the time efficiently. And let me start with Butch on this one. In terms of the lessons we learned from the development of the UN principles, that work between industry with yourselves, developing those principles, and other initiatives, we talked about the Net Zero Insurers Alliance and so on. What for you is the key to really effective collaboration to address some of the issues we've tackled today? And if you had to identify one priority for the future, a sort of key next step, and it can be for policymakers, it can be for industry, what for you is the most important next step? I'm wrapping them into 2 to save time.
Sure. I have a minute.
Yeah, please.
Okay, good. I'll answer them. So I think when you talk about collaborative initiatives like the PSI, one should view us as guide dogs. We are guide dogs towards good practice, working with the industry towards good practice in addressing sustainability challenges, be it climate or nature loss or human rights. And the one thing that I think, the single biggest thing that I think that is most impactful in an initiative like the PSI is strength in numbers. If you're doing it by yourself, you can make, but if you're doing it with others to drive systemic change, it will have far-reaching impacts. So strength in numbers is very important, and that's why.
Next step?
Yeah, and the key next step is, if I have a wish on what to be done, has to be done in industry and policy, is very simple. Since we're talking about climate, for every insurance and policy decision to take net zero and resilience into account. It's 2 sides on climate change. You cannot simply be resilient, you need to mitigate. So if you have every policy decision and every insurance decision taking into account emissions and adaptation, will go a long way.
Thank you very much, Charles. Hang on, we have a muting. There we are.
Sorry, I had to come off mute. Let me be then quick. I'll sort of skip the NZIA and other bits. I think from us, there's a clear call really for insurers to support our activities in terms of innovating to go into the transition. I think there's really a focus for us on a long-term perspective. Cooperation is obviously key. And I think if we're looking for an action, if I may, we really look to the Commission to be a strong leader on the EU climate resilience dialogue. So yeah, I hope it was brief enough, Jackie.
That was perfect. Wonderful. Eleanor, what is your hope? I think the dialogue is due to report June next year. What do you hope will come out of it? Your key for effective collaboration and your key next step.
Okay. Well, I think we now all understood in the dialogue that we are all in this together. So I hope even beyond the dialogue, we will continue collaborating. And here I would also take the point made by Butch, following the science and continuously working on resilience and of course on the net zero. For the insurance industry, my big wish is please keep supporting climate policies, mitigation and adaptation. We are one of the few policies where you really have a goalpost at 2050. Climate law, legal instrument that goes beyond the lives of several colleges, political commissions, and also keep investing in adaptation and the net zero, because it is important that you preserve the economic activities, you lower losses, and you indeed avoid any spillovers across economy.
Thank you very much indeed. Oliver, you have the last word. Key to effective ongoing collaboration through the dialogue and other fora, and your key next step.
So cut it short. First of all, collaboration, yes, but we need to talk about how to avoid parallel working streams on the same issues and eliminate any ambiguity. I think the work on the climate resilience dialogue is a good example of this. And Elena, thank you very much for having organized this climate resilience dialogue. Second, in the past, I think we insurers have built an extensive knowledge of how to calculate our risk, the classical risk like fire, windstorm, and so on. I think with the same claim to professionalism, we must now devote ourselves to collecting data in the area of sustainability. In my personal opinion, this message has not yet reached all insurers, brokers, policyholders, and so on, because it matters, because we need to measure our improvement. We need to have a basis for our decisions, not something that wanders around and it's in the mind of some underwriter. We need decisions that a policyholder, a broker, an insurer, a lawmaker can rely on and really say, okay, I follow it, I understand it. And that is lacking right now.
And on that note, I would just like to thank you all for a great discussion. I wish we had twice as long, but we covered an enormous amount of ground. And thank you for provoking each other. Thank you for being demanding of each other. And thank you to all of you for joining us, whichever method you used to join us today. Thank you for your questions and comments. And it only remains for me to wish you all a very pleasant rest of the day. Thank you very much, guys. Terrific discussion. And thank you to GDV for hosting us.
Thank you.
Thank you. Thank you, Jackie. Thank you to all of you.
Thank you.